You might want to take a little bit of precaution tomorrow morning as we have a lot of data and news events that will be happening around the market open. Number one, we have producer price index, or our PPI report, very similar to our CPI report that we had this morning, which is an hour before the market opens. Then we have our Supreme Court ruling over the Trump tariffs at 10 a.m. Eastern, 30 minutes after the market opens. So right around that market open, we could be chopping around. It looks like it's going higher. It looks like it's going lower. And today we saw a little bit of that with our CPI report, right? Our look above into 697 on SPY, almost to that 700 mark. And then we came back down underneath 694. We technically created a lower high from our previous day's close. So it's something to look out for, right? So just be mindful as you continue to trade the upside and trade the upside, right? Or trade the downside. It doesn't necessarily matter. It's just the market is creating volatility back and forth. If you saw today, I'll show you on the charts, NVIDIA came down into 183, bounced all the way to 188, and then sold all the way back down to 184 and pretty much closed flat, right? So we're going both ways. It's hard to look away from your computer if you're trying to day trade and say, hey, the market, I'll just leave it, see what happens, right? It's not that type of market to start off this year of 2026, which is what we kind of talked about how a midterm year could be. All right. So tomorrow is going to be very interesting. We also have TSM earnings on Thursday, as well as a lot of the financial earnings coming out a little bit shaky, but we'll have to see how they react, right? JP Morgan pulling back, which the financial earnings have been fairly good over the past couple of quarters, which is why the market just kept spurring higher, because the financial sector is very heavily weighted in the S&P 500. All right. So without further ado, let's jump into it. My name is Dr. B. Check the links down below if you'd like to support the channel in any type of way. You could do so by just simply hitting a like, leaving a comment down below if these videos are helping you, supporting you any type of way. I do respond, and I appreciate the support or constructive criticism. Either way, this is a community. We want to make sure that we're helping out each other. All right. Turn on those notifications so you make sure that we're pumping out a video roughly every single day at this point, whether it's an educational video or it's a midweek update. And then we have our weekly market analysis on Sundays. All right. So I'll talk more about Leverage University as we go along and towards the end. So make sure to stay tuned for that. So you make sure, hey, if you're on the edge and you enjoy this and you're looking to join something, you can learn a little bit more about what it is, how I like to run my community, and how other people are enjoying it as well. All right. So let's summarize the CPI report. I'm not going to read all this. You're more than welcome to screenshot it or whatnot, but we use, AI these days, type in the things, but this is trying to make it easier for the viewer that's watching right now. Okay. The CPI report, our consumer price index, rose slightly month over month, seasonality adjusted basis, in line with economists' expectations. Over a year-to-year basis, all items index increased unchanged. And we have, which excludes volatile food, energy prices rose. Key contributors to the increase include shelter costs, right? Rents, we know that, and food prices up, as we know, and together accounted for much of the monthly gain. Offsetting factors included a decline in vehicle prices, but I still think the interest rates are fairly high, but used vehicle prices are coming down, and in moderation, energy costs as well, along with gasoline. So if you drive a gas vehicle, you may have noticed the gas prices have come down depending on where you live in the country and or the world. All right. Overall, the report indicated steady but persistent inflation above the Federal Reserve's 2% target and some softening in core measures. Now, why did the market reject here? We got three different things that could be factors. Limited impact on rate cut expectations. So since the data was fairly flat, the investors or short-term traders or big money hedge funds are looking for something that's just out of the ordinary, right? And right now, the Fed has kind of signaled that they are potentially just going to pause rates at the next Fed meeting. So what we're looking for is some type of indication that will give us, hey, we need rate cuts, right? But with a strengthening labor market, it's kind of steady, right? That doesn't signal rate cuts. So in my opinion, based on why the market looked above and failed today, is because it was kind of a flat CPI. It was, okay, but if it would have been a little bit more drastic, it was signaled, hey, you need to cut rates, and the market would have spurred a little bit higher with continuation. Sector specific pressures. So what dragged the market down was the financial sector, as we talked about, right? Fears of reduced banking profitability, that also, the credit card 10% bill that's still on the table. Tech heavy Magnificent Seven stocks also retreated a little bit. Amazon pulled back, Meta pulling back, Microsoft still pulling back. Right, AMD did spur higher today with an upgrade. Nvidia spurred higher, then came back down and just kind of closed flat. So Google still very strong. Apple still kind of sitting flat around that 260 mark. So broader market fatigue just signals a little bit of exhaustion, right? Doesn't mean the market's not strong. It doesn't mean that things can't run this year. There's still some great opportunities, but we have to look a little bit outside the box. Some speculative stocks, right? Our quantums, our AI stocks, things of that nature that were speculative, our data center stocks, right? As well as some of the consumer discretionary stocks, right? Your restaurants and things like that people are looking like, okay, this is not going to do anything, right? You may have to look at that to say in healthcare as well. What am I expecting out of that? Am I expecting to run like, a tech or AI stock? Maybe not, but can I get 20%, 30% on that respective stock or sector and then take my profits and move it back into my AI stock, so on and so forth, as they kind of settle in or pull back, right? The rotation of sectors is very key. And I personally think that we're so heavy in AI and tech that many people aren't looking elsewhere because they're like, man, I want 300% gains, 400% gains. As long as you can beat the overall S&P 500 with whatever you're doing, right? Dollar cost averaging into the SPY or QQQ or even the Russell 2000, our IWM. Those are our indexes. So dollar cost average into those, not financial advice. But then if you're looking for more than that, if this is a flat year, you might have to say, man, this isn't the sexy stock. This isn't something that's going to go crazy, right? And I'll show you what that looks like on some of these charts. All right. So just wanted to summarize that really quick. Let's jump on the charts here and give a summary of what the S&P 500 SPY, what I was talking about here on the quote unquote look above and fail. All right. You can see here that in the after hours, okay, we go into extended hours here. Okay, this is what I was talking about. Is we looked above, it looks like we were strong, going and running into 700 potentially, like we have been, right? Bounce, run, right? Pull back, run. And we could still do it here with a positive PPI report. And also if the Supreme Court rules and the market reacts positively, that this is still a higher low, higher low, higher low. But if you're hearing investors talk about this kind of, or you're seeing different things around YouTube streets and whatnot, and you're like, what are they talking about, right? Are they just trying to fear monger? No. And if you've been following me for a while, right, I don't fear monger. I don't try. I'm just reading the charts, right? Because you want to have your risk hat on all the time and not be so one-sided one way or the other. So this right here is signaling a little bit of, hey, maybe we need to protect ourselves, right? Because that is a look above, fail back below, look above, fail back below, right? So this 695 and really more specifically this 694, right, came back underneath and we technically closed lower than we closed before. So we closed up here at 695. Today we closed at 693. So if you look at that, that's technically a lower low, right? Now, in the broad scheme of things, are we going higher? Yes, right? We're on an hourly, right? We can still say higher lows, higher lows, higher lows, higher lows, right? But in general, like I keep mentioning, because I have new individuals on the channel all the time, is that we can go back in history and kind of look at leading into big data, what that may look like sometimes. And this was the first tariff announcement right here, right? When Trump tariffs were induced, and came out and said, hey, we're going to tariff everything, blah, 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 back in October. So we were grinding higher. We were so one-sided and we're bullish, right? I don't see any signals. I don't see any signals. People's risk hat isn't on, gives back all those gains, right? But yes, we went higher. But if you're not prepared for that, there's the dip and you're stuck holding the bag and have to stop out, or you forget about things and you look up. And I'm speaking more specifically to short-term traders or investors that are trading options and or futures, right? If you're long-term, just pick up the dip. Keep dollar cost averaging. You actually want it to drop, okay? So just wanted to mention that up here as to this kind of 694 area being very, very key tomorrow as we watch the market's reaction with the data reports. Now, for Qs, which is our main tech index, you can see right here that it's still hugging underneath that 629, right? And you can look left over here that it tried to get through that multiple times, 1, 2, 3, and then finally failed with some data and news. Same right here, try to get above, and now it's trying to build strength again to say, hey, come on, right? But again, if it can't get through that, then we have to, as I like to say, gather up more troops, gather up more buyers, and buyers give up a little bit up here because their risk is maybe a little bit too heavy, and they stop out and say, cool, whatever, we can't get through it. I don't want to keep holding right here. If we 1, 2, 3 and can't really break through there, then it could break down a little bit further and come deeper, and we, come back down to this 618, 620. If you've been watching me for a minute, these are the levels I was talking about. 618 to 620 on QQQ is a big level of support. Okay, so mark that on your charts. You can look all the way left here, that whole zone. All right, look at those wicks that come down in there, 618, 620, 618, 620, 618, 620, right? So that's our first pit stop, that if we did break a little trend, we would come back most likely down into there. On SPY, it would be back down into that 689 to 690 level to see if we can hold that. Okay, right here, right there, right there. And we kind of came back into it towards the close right at 691. Okay. Now, if we break underneath 689, that's technically a little bit more of a break of structure. All right. So if we break underneath this level here, that, and it looks something like this, okay, then that's technically a break of structure. Now, Brian, stop talking about the fear mongering thing. What if we go higher? Then you're just looking for a break of previous day highs, okay? Break of previous day highs. Ideally, when I talk about breaks and I'm teaching this, people are like, what does a break mean? Today looked like a break and then it failed. You want to see a solid, in my opinion, 30-minute to an hourly candle. A lot of traders for confirmation will look at an hourly close. So you want the candle to look like that, okay? And it will be green, okay? So you want it to close like that on an hourly time frame. Then you can say, okay, cool. That's a strong close. This is not a strong close. You see that top wick failure, top wick failure, all right? So that is why the market is trapping a little bit up here with buyers. But someone could say, if we had positive news, Brian, I don't know what you're saying, that's a bull flag. Could be, right? Could be. I could raise that right there, and that definitely could be a bull flag. And then we could just rally tomorrow like that. That is very much possible. But you still have to keep in mind these highs up here are supply / resistance, right? So you do not want to chase into resistance. Well, I don't want to miss the move. Let it clear, right? Let it clear. Almost feels like you're chasing, and try to find a little bit of a pullback to make sure that it's going higher. If not, right, I would stay away from this area for right now, right? Stay away from this area for right now until we get a direction, all right? IWM, here's kind of a look above, fail back below, and I'm looking right at that kind of 261 area, 260. So maybe just 260 watch, psychological area right there, 260. If it holds above 260, it could try to trend back towards these highs like that, and we continue the trend on the upward trajectory with IWM. All right. So IWM is in this clear, upward channel there, but eventually that channel will break. I'll show you what it looks like on Amazon for a pullback that's deeper. See this trend channel right here, right? So eventually you trade the channel or stay away from it until that channel breaks. And that was a nice little head and shoulders that I've been waiting on for a minute. Did not catch it, but there it is. A little bit of a lower high set right there. And then it finally rolled over, okay, back to 240. All right. So Amazon is back in a retest zone, right, of roughly 240 to 238. Now, if it comes down a little bit deeper, I personally would like it a little bit better. But 240, I really never like to take the first drop test. I want to see it, drop, break trend, come up and retest, roll back over, and then come down to a final level of support and start basing. Something like this, break, and then come down a little bit lower into there, and maybe we can find something like that. All right, if the market holds up. But 240 is a support on Amazon. So if you caught that and you like that level, right, 240 I'd like it to tick a little bit underneath. Ideally, I would love it back at the daily moving averages, right? That'll be right there at 235. So I would love it back here. I think that would be a lot better, but never get what we ask for sometimes. All right. So Amazon, there you go. Let's look at a couple of key names. I'm going to roll through them really quick. A lot of folks are looking at Apple. Personally, Apple, I would just be very careful with because it looks very similar to a Meta. What do you mean being very careful? Is that it can go lower, right? Apple looks like this. Okay. Here's Meta, right? It drops. Everyone picks up the dip. It comes back up. We're back. And then it rolls back over, right? To come back down. All right. The selling might not be over on Apple. It might just be a retest. So if you want to pick up this little dip, great. But in my opinion, there's the neckline 265, right, to 266. If it pops up like that, okay, into this area, I think that's going to be a retest to come lower. Okay. Just my opinion. Okay. There's a cross right there, a little death cross on a daily. Those moving averages cross, it presses down the stock and maybe comes up and retests those moving averages. And then it starts pressing down more, and then we get that continuation. So I'm being patient on Apple. I would rather see it down closer to 250, maybe even 240, right? Down into here, right? Maybe down into the daily 200, but 240, 250, I like a little bit better on Apple. But do with that what you please. Just be careful right here, assuming that this is going to just take off. It could pop. You could take a little bit of upside, but that is a grindy move back to the upside there, and it could just be setting up for a little bear flag, and then we come lower. Okay. So I just want to mention that on Apple so you have a different look. Google just spurring new highs. I don't like to chase new all-time highs, so I'm just letting Google go. It did leave a little bit of a gap back to 230. So, once profit takers get what they want out of it, maybe it rolls back to 230. 230 is now your support. So just watch for that to pull back to 230 and then continue higher on Google until it breaks trend. All right. Went over Amazon. I'll touch on Netflix. It looks like it got some positive news. Microsoft, really nothing doing here. Broke below the daily, like I talked about in the last video. Broke below that daily moving average stack right there, the daily 200. It is still sitting in support, but underneath these moving averages, it could come lower, especially if the market starts pulling back. Meta, same thing, underneath the moving average stack, retesting the lows there, maybe 600, or retesting down underneath these lows, and it continues into a new lower low, which would create a buying opportunity, right? NVIDIA just sitting around this area. It looks like it's going up, then it doesn't, right? Like I talked about, just kind of, you can scalp NVIDIA. It's been nice in this little channel because we know that the levels, 189, at least for right now, 183. Okay. So it's kind of just sitting in this channel, but that rejection today as they were trying to take it up past 190 and squeeze was not the best thing that you wanted to see. But I keep telling my community that, it's kind of an iffy thing of what this is right now. Okay. It could be a bull flag. It's sitting right on the daily moving averages, as you can see right here. Okay. See how it's stacked right on top of them? So it looks like it's trying to take off, but it's not getting much juice, right? They're trying to get this thing to take off of these moving averages right here and gather some juice. And then sellers are like, no, we want 180, mid 170s again. Okay. So it's kind of a crapshoot. I would stay away for right now. If you're stacking longer dated call options or stacking some shares because you're like Nvidia is going to be all the way up here at the end of the year, do your thing. But in here, it's just kind of scalping puts at the top of the range, calls at the bottom of the range until the range breaks. Okay, so draw your little range there, back and forth until it decides to break down out of it or break up out of it. All right, AMD was the star of the show today, and it did not give me a call entry. If you can see here in our community, I put our trade ideas inside of here, and I talked about AMD last night as it had a nice break of trend. Okay, where is it here? I think I did it in announcements. Yeah. Core names we trade daily, looking for potential squeezes back to the upside. Hood, that happened today. Tesla, yeah, kind of flat, but did squeeze higher. Nvidia and AMD, yep. Apple on positive Google news, yep. Google above 330, yep. And then side watching these two and some other names as well that are settling in, which I'll get to in a second. So AMD, I really wanted calls on AMD, which again, it's if you're inside of Leverage University, inside of my trading group, it's like, you see what I'm talking about? Like the gap ups, it's very difficult. Now, some people might have taken the opening drive. That's fine. I don't like to trade the opening drive. I like to get to levels, trade risk to reward. But some people took the opening drive and it was great. It gapped up with continuation and momentum. Opening drive is that first 15-minute candle drive to the upside. That's perfect. I don't personally like to do that. I've gotten faked out way too many times. So, anyways, it pushed up into, we were watching this level here, okay, which was into 223. That was a key level of resistance right there into 223. And we're kind of in this zone, okay? It was also up into the daily 50. Remember, like I told you, make sure you have those daily moving averages on so you make sure where strength and potential weakness is and where chop is. So we're kind of sitting at the top of the range. You see, I was rejecting off of that level. Could it blast through? Yes. If it blasts through, we're going to 230. If it does not, I mean, we still got some resistance up here at maybe 225, but if it gets above that moving average, it can start just gaining some strength. So my expectation, ideally, is this gap fills and somehow the data is poor, or the Supreme Court comes in and get that continuation. We did take the scalp put off of the highs here, so we entered puts right here, right, for this nice 15 to 30 minute pullback there for roughly about 15 to 25%, depending on the contracts that our group entered. Okay. So we did get that. We did not get the continuation through the gap. Sometimes we get that, but today we did not. Okay. We got a pop and then just grinded higher because AMD was strong with an upgrade this morning. All right. All right. Let's jump around here. TSM's got earnings. That'll be interesting. If earnings are not as expected, this gap will probably fill. It'll be all the way back down to 300. If they are good, we'll gap up and then we'll continue higher. But it's running into earnings. I'm not necessarily the biggest fan of when stocks run into earnings because a lot of times it's already priced in, but it can continue higher. So we'll just react and see. MU starting to, it's just MU. So it's got a lot of gaps below. MU, we're trading it very, very well, but I don't like new all-time highs every single day. So I'm just kind of waiting for a break of trend for it to start picking up volatility again. And maybe these gaps get filled. Maybe some crazy news comes in, but we'll see. Palantir, not doing much here underneath 180, and then top of the range at 189 is just really not doing much in my opinion. Let's jump into some of the really nice setups that I see that you could start looking at longer dated call options or some shares, maybe dipping your toes in some shares. One is Hood. Okay. Starting to really like this inverse head and shoulders right here. And then we get some type of catalyst. Bitcoin, it runs typically with crypto. Prediction markets are coming up with the final four, right? Things of that nature. So it's basing really nicely here at this 115. Today it closed above 120. So your first target on Hood would be back up to 125. Clears 125. We're off to the races. It's going to start squeezing. Okay. It's going to start squeezing back up into 130. So definitely keep your eyes on Robinhood for the remainder of the week going into next week. I do like this. You can trade it up to 125, leave some runners, or if you want the big move, maybe put some time on it and keep your stop loss underneath maybe 115. All right. So Robinhood, do like this. Let me see the moving average stack here on a daily. Got above the daily 20 right there, as you can see, coming off of it. See how it catapults off of that? And then the next moving average stack is right here into 125. So you don't want to get a pop and then it rejects off of that moving average stack again, right? That's why I'm saying that should be your first target. It breaks through that, then that could be additional hold or add on or whatnot if you have time on your contracts. But this is starting to look really, really good, in my opinion. Bitcoin starting to, kind of get some steam going, quote unquote, holding above 90. I think it got to 94,000 today. So definitely watch Robinhood in the short term. I think, again, if this starts playing out like a bull flag and it starts taking off above this 125, I mean, that is a weekly trend change. That is a weekly trend change if it does that. Okay, we got back above that weekly 125 rejection, and that is a break of trend. We're going to start squeezing pretty massively. So keep that on watch, and we also have a gap fill up there. All right. You see in the after hours already at 121, so I think it's going to get some momentum pretty soon. Yeah, 120s, 125s, 130s. Yeah, a lot of stacked up options right there. Okay, let's go to another one. Okay, now this one, I think that it may have a little bit lower, but it's starting to get in that range of maybe some shares. Now, if you're not familiar with Datadog, right, just look it up, do your due diligence on it. But it provides a security platform for cloud applications, had a massive earnings beat, right? Had a massive earnings beat into 200, and it is roughly 40% off the highs right here, right into some moving averages. So I would definitely keep your eye on this into maybe 120, and maybe you can get some, I've seen things look like it's going down further and then just absolutely bounce oversold and just rips. Okay, so as you can see, starting to curl up just slightly here off 123. Okay, and if it starts changing some trend, gets back to 130, clears 130, I mean, we're trending back up like that. So maybe 130 be your first target, but I do like this basing here and curling there on Datadog. All right, that just simply means shares are great. Until it confirms, maybe it's a little bit of early entry, put time on your contracts, looking for 130 as that first ideal target. If I do a Fibonacci retracement here, that would be right into that golden pocket there, 130. I think buyers would start picking up a little bit more, and then we roll back up to 140 and some change. So does make some big moves once it gets going. As you can see right here, 137 goes to 168. So I think it has a lot of opportunity there personally. Oracle, okay? Oracle, this is in my opinion, could it come lower? Yes, but this is a breakout pullback. If this 200 level holds, maybe even 198, okay? We wanted that break, retest, and then start jumping like that, okay? Trying to get to that 210 is your target in the short term. Okay, tried to get there. It looks like it's kind of basing on a bull flag here, so that looks pretty good. I'd put some time on it. If you do shorter dated contracts, just be mindful. It is going to be Wednesday tomorrow, so scalp it if you want. Could get a big move this week. Could go to 210 easily by Friday, but if you want to be a little bit safer, go out to next week or the following week. Contracts are a little bit more pricey, but Oracle trying to get to that 210 plus mark, start filling this gap right here up to 220. So I do like this break retest holding that $200 level on Oracle. All right. So we've gone over Hood, Oracle, Datadog. Let's see. SoFi, just basing here until earnings. I mean, nothing really doing there. I know people want SoFi to just take off, but as you can see, just basing right at 25 to 26, trying to get to that 30 mark and then take that out to go to 32 plus. So if you want to stack those, you're more than welcome. Okay. Now, here's some oddball out ones that we normally don't talk about. Oh, I'm sorry. Before we do that, let's do Qualcomm and CoreWeave. All right. So Qualcomm in the semiconductor sector had awesome news. As you can see, popped here, went higher, and then for whatever reason got some downgrade. I think it was a fluke personally, maybe just to drive the price lower before earnings. But keep your eye on Qualcomm leading into earnings. You see all those gaps back to the upside, right? And pushing right back down into a support range. Maybe this could be a higher low here. It may stop a little bit earlier. but maybe 165 could be a mark right there. See, it's approaching that previous resistance right there, and then approaching it again. I know it's underneath the moving average stack right there. So definitely rejecting 168, 170, but I think it's an oversold, solid pickup, maybe putting some time on it, grabbing up shares to be safe. But yeah, $200 stock easily in my opinion. But that's just my opinion. All right. So got Hood, Qualcomm, still paying attention to AMD. I would love that gap fill to pull back, but AMD definitely basing here at this $200 mark, just absolutely ripping. So some people are looking at this as 1, 2, 3. It breaks this neckline here back above 230. I mean, we could be off to the races, back to all-time highs for AMD, but would love a gap fill first, potentially, and then see if we can base there. But we don't always get what we want, right? So AMD definitely an opportunity there. CoreWeave. So I'm touching, as you can see, all the semiconductors / tech / data centers. CoreWeave here, doing a break and retest. As you can see, same thing as Oracle, broke yesterday, consolidating and retesting today, roughly that 85 mark. If it holds that 85, okay, you can see that is a moving average right there. Got above, break, retest that, and then roll back to 100, right? Like I said last time, contract's a little bit pricey, a little bit elevated in my opinion. Maybe shares will be the best. You can see the implied volatility, right? Which, if you don't know what that is, that just means typically you want implied volatility to be underneath, 30 to 50%, right? Sometimes you'll have stocks that are 50% plus, but as you can see, very volatile, very 30 to 40%. That simply means for those beginners out there that if it's above that 50, 60%, the contracts are going to be very elevated from what they should be. Okay. So if you're trading options, implied volatility, right? Expected moves are very volatile, right? People are loading up one way or the other. So they're kind of, putting a little price tag on it, so to speak, right? They're not making it easy, right? To get easy money off of CoreWeave because everyone's expecting CoreWeave to go up and they're like, yeah, let's raise the contract prices. I'm putting it in layman's terms. Okay. So, Uber, definitely paying attention to this leading into their earnings, right? I think Uber is at a very solid pullback level here, just consolidating there. I do like that, right? Starting to build a base off of this $80 level. Okay. Has it really confirmed? No, not necessarily, but I do like the strength coming off of here. Multiple touches, as you can see, comes down in here, bam, comes down a little bit lower, bam, reclaims, bam, comes back down, and then we could see that. So Uber, I do like leading into their earnings, which I think is in the middle of February or something like that, but that looks like a really nice bull flag in my opinion. Really nice level there. You can see what happened last time. It got around this level of 83, had the potential to go up back to 98 to 100. So definitely would watch Uber back above the daily 20, gets back above 90 in my opinion. It can start really moving, but right now is an early entry. Okay. Put time on this in my opinion and you're good to go. Lyft, same thing. Okay. Lyft, same thing, just slower, obviously. Right. Lyft, in my opinion, is more of a leap opportunity, leaps. Okay. You just got to wait. Or if you don't want to deal with options, just put shares in because $30 is very much possible this year and beyond. So if you just do shares, if you're late to the party, some people have a Lyft underneath $15 down in the single digits. So if you're just entering right now, maybe shares would be a little bit safer for you just to make sure. And then you would look at 30 as a target and there's your percentage. Okay. What else is moving? Walmart. Okay. Absolutely taking off. Now here's one people might have, ifs, ands, or buts about. Okay. Target. Okay. Looking beautiful in my opinion. Okay. Some people are like, Target's dead and people are boycotting, so on and so forth. This is not a political thing. This is not even a cultural thing. Do what you please. But in my opinion, Target, based on a chart perspective, it has broken trend back above 105. It has room back to 120. And if I do a whole monthly, now this is one of the stocks I was saying earlier, and I'll wrap up here. showcasing what this looks like. These aren't the sexy things in AI and whatnot, and Target's gonna be dead, like whatever your opinions are. But if you're looking for something that has a good risk to reward, and you're seeing Target that has the possibility of going back to 150 and then sitting here and then sitting here and then doing this, whatever, right? But if you can get a percentage off of this, great. I'll show you a perfect example. Dollar General. Man, Dollar General's dead. Why would I invest into that? Right? Or if you say yes, we called out Dollar General back down here at 70. Okay. If we put here in our shares and leaps channel, go to DG. Okay. Got a whole channel for it. Right. This was 11/21/2024. Okay. So a year and a half ago, I was talking about Dollar General, the easiest money making opportunity ever, right there at $70. Right. And it's almost back to the 50% retracement at 160. Right. Takes new stake in Dollar General. There we go. Starting the base right here, coming off of there. No one wants to do Dollar General. There's a gap fill right there. Already filled that gap. Okay. And then here we go. Just updating it. There's at 112. There it is right there. Right. Almost back to $200. Okay. And here we go. So this is the type of company that kind of goes out of the water that people don't look at and say Target is dead. Right. I don't personally think so. I think could it, sit and pop, but this is starting to base, right? Last time Target was at $100 and got back above, it had the possibility of going 50% from here. Okay. So be mindful that lower your expectations of whatever it is. Is it a big tech stock and whatnot? No. But does it have the possibility to give you 50% returns? Yeah. All right. If you even entered late. Okay. So obviously not financial advice, right? I would watch these levels here. It did break right here. And we do have some gaps up to the top. So there's 115. Here's 130. There's a gap up to 146. And then Target be back to almost $200. And then people look up, oh man, I should have bought that. Okay. So again, be mindful of some of these companies that are not as sexy or don't move as like you would like to. Okay. So just want to mention that as an example. Healthcare, right? Keep your eye on healthcare stocks for right now. The HIMS, okay? I know the GLP-1 space is definitely in speculation, but as far as a risk to reward, okay? Meaning if it's sitting on a chart at a very solid level and you want to take a small risk on it, a small position, right? With the possibility of having it go from 30 back to 50, is not worth it. For some people, it's like, I could do better on, okay, cool. That's fine. That's fine. Same thing with Kava. Okay. Again, these are stocks that have the potential to retrace 50% back from their high. So if I do a high to a low, right, the 50% retracement is at 109. That would roughly double your money on Kava from where it is. Chipotle. Okay. Do a 50% retracement from here back to here on the lows. That would be roughly around $50. So you take it from just say mid 30s up to 50, take your profits and get up out of there, redistribute. Okay. So again, as people mention these stocks or these different things around the YouTube streets or the social media streets, you have to say, what is my expectation for this respective stock? Is it to blast off and be the biggest tech stock, AI stock in the future, right? Because retailers can go out of business. But in the short term, can it be an uplift? Potentially, right? So this is what we're talking about, a midterm year that could be very speculative, that could be back and forth, so on and so forth, okay? I know people are wondering about the Nebuuses and, the we talked about CoreWeave already and various others, aviations. Let's see what Joby's doing really quick. This video is about to be a little bit long. Okay, cool. All right, folks, peace, love, and blessings to you. I did a little bit of extra today just to give you some ideas because I know I keep talking about midweek things, but Brian, what about things that are longer term that maybe I don't want to mess around with this stuff? What can I grab some shares in, right? big tech stocks, AI stocks, semiconductors, and then some outliers there as you saw. So if you need to rewind this, take a look. If you have any questions, concerns, we talk about more of this inside of our Discord where I get a little bit more detail, but these YouTube videos, right, I try to make them short and sweet, to the point, do your own due diligence, and I will see y'all in the next video. Peace, love, and blessings. Trade safe. Bye-bye.